Clearly, you've bought the dip, but what if it's not a dip? How much have you considered the possibility that this is part of a prolonged slide?
Well, we think the primary dynamic is the China exodus. There's a forced and there's a rushed exodus of capital and mining from China that was a bit of a surprise that kicked off in May. And that's driving the dynamic in the market right now. Our strategy is long term. 10 years ago, I met with you, Emily, and I talked about the mobile wave. And the mobile wave was the dematerialization of music falling to the Apple iPhone and then turning books into iBooks. If you want to give music to 5 billion people, you got to take the music out of the CDs. And if you want to give books and education to 5 billion people, you have to take the words out of the book and you got to dematerialize the library. Bitcoin is the dematerialization of property. We're sucking the value out of gold and real estate and other property assets and collectibles and art. We're putting them on a blockchain. We're giving it to the people. It's a long-term trend. It's 1,000,000 times more efficient than hauling your property around on your back. And if you want to give property rights to 5 billion people, you need Bitcoin to do it and a smartphone. So it's a technology play for us. And we're very confident that over the next decade, 5 billion people are going to have property on a smartphone, and Bitcoin is going to be the primary blockchain that's used to do that.
Michael, I went back to that interview from 2012 to prepare for this one. I remember it. But speaking of smartphones, give us the truth. I mean, how often are you checking your phone and checking the price? Are you losing sleep? Do you meditate? Do you have a stiff drink when the price goes down?
Well, look, I'm not a trader. If I was a trader, I'd have anxiety. That's a difficult job. I'm a technology believer. I bought Facebook before it came public. I bought Apple when it was a couple dollars a share. I held it a decade. This is a 1-decade long trend. MicroStrategy's acquired all this Bitcoin with a combination of equity and debt, but the debt is all long-term debt. It's either unsecured convertible bonds that run 5-6 years or secured debt against our cash flows of our software business. We don't mark anything to market. So we're not really concerned about short-term price fluctuations. In 6 or 7 years, yeah, I expect Bitcoin to be higher than it is today. And how it gets there, it'll be volatile.
Now, I know you haven't been a fan of altcoins in the past, but are you considering holding other cryptocurrencies beside Bitcoin? Are you already holding them? If so, which ones?
The way that we look at the digital ecosystem is you've got digital property. That's like owning a block of Cyber Manhattan. You're just owning the Granite City block. 1 Bitcoin is a block in Cyber Manhattan. Then you've got digital currencies like Tether. They're currencies. There's not much upside. They're just going to be regulated like money market funds in cyberspace. And then you've got digital applications, and they're trying to dematerialize insurance companies and exchanges and banks. They're kind of like the buildings on top of the Granite City block or the business in the building. It's a different thing, If I went to Vegas, I would just want to buy all the land in Vegas. Somebody else might want to build the hotels at the casinos. That's not for us. It's a complicated business. It's a little bit more competitive. We're waiting for a bit more regulatory clarity. If you're going to be an insurance company in cyberspace, there's probably insurance issues or trading issues. We've adopted a very simple strategy. Buy 105,000 blocks of Bitcoin in Cyber Manhattan. We think it's going to be good for hundreds of years, and one day billions of people will want to live there.
But why not then, and this is a question coming in right now from a terminal user, buy other more energy efficient forms of crypto? Are you considering that?
Well, we actually think that the way that Bitcoin mining works is the most energy efficient way to create a trusted digital property network. It's you put in $1, you get out $200 of value on Bitcoin. If Google puts in $1 of energy, they get out $10 of value. It's in fact the most energy efficient industry in the world, and the amount of energy that it uses is a few basis points of the amount of energy used in the civilization. So I'm not concerned about the energy use. There's no more efficient way to do it. If I wanted to run a centralized application, I could do it with less energy. but there's no way that you can create digital property that's going to last for hundreds of years outside of the control of a CEO, a government, or a country that has integrity and durability without using energy.
So, what side of the Bitcoin, if you will, do you consider yourself relative to Elon Musk?
What side of the Bitcoin? I'm
Exactly.
sorry.
How would you describe your position on Bitcoin relative to Elon Musk?
My position on Bitcoin is it's the dominant digital property network in the world. It's won that race, and if what you want to own is digital property for the long term, then you just buy and hold Bitcoin. I think that Elon Musk also sees Bitcoin as a great store of value, and it's a monetary inflation hedge, and he has expressed concerns about the need to invest balance sheet assets as a monetary inflation hedge. He's got many other businesses that he also evangelizes and is very enthusiastic about. I'm a bit more focused on Bitcoin, I believe.
I know you've been on at least one call together about energy. Are you guys in touch? I mean, do you speak often?
We do. We
And what do
do.
you talk about?
And Elon's been very enthusiastic about Bitcoin and also about making sure that Bitcoin's a force to drive sustainable energy usage in the world. And I think he's talked about that a bit. I've organized the Bitcoin Mining Council so that we can promote energy transparency and communicate the energy usage of Bitcoin and also show how sustainable it is. In fact, one of the things we found is that the Bitcoin industry is using more sustainable energy than any other industry, and it's getting more sustainable at a more rapid rate. So we look forward to sharing some of those findings shortly with the public.
Let's talk about the crackdown in China on Bitcoin mining. What does this mean for the longer term?
Well, China had 50% market share of Bitcoin, and they were generating $10 billion a year in a business that was growing 100% a year, year over year. And the government cracked down on it, and they squeezed the entire industry out of China. I think that given the growth rate of Bitcoin, this will prove to be a $1 trillion mistake for China. So it's a tragedy for Chinese miners. It's a geopolitical mistake for China, the country, but I suppose they can afford to make a $1 trillion mistake. It's a nuisance and a dislocation for Bitcoin in the near term. You see the trading volatility. It squeezed a lot of people a lot of Chinese had to sell Bitcoin and under forcible liquidations with a time frame because they have to get out of the country and all their loans got called. And so that's been a big opportunity for Western investors. Companies like mine bought Bitcoin in the 30,000 range. We would have paid double, maybe triple to buy the Bitcoin if it hadn't been for the China exodus. So we got to benefit from that. And it's a great windfall, Emily, for North American Bitcoin miners because their costs are the same and they're going to generate 50% more revenue or 75% more revenue for quite a while because the Chinese industry has been taken offline.
Now, still, it seems like there's no impetus for a rally on the horizon. Chances are a Bitcoin ETF not getting approved this year. Regulators in the US are also going to tighten up. What drives Bitcoin from here exactly? And when? When do we come out of this?
There's a delay. If you roll the clock back 6 months to 9 months, mainstream media didn't cover the story and people were uncertain about what would happen. Biden being elected president was good for Bitcoin. Gary Gensler taking over the SEC was good for Bitcoin. The new class of regulators are progressive. They're more enlightened. They're more educated on Bitcoin. I think that you will in time see a Bitcoin ETF. You've seen Morgan Stanley and Goldman Sachs and most major banks start to trade in Bitcoin and Bitcoin derivatives and offer Bitcoin mutual funds. There's an avalanche of banks that are going to be offering Bitcoin services. And of course, Coinbase came public and Square and Coinbase are between them, adding millions of new Bitcoin holders every month. And so you just got to be patient and look at the long-term technology trend, which is, do you believe in iBooks and do you believe in the iCloud and do you believe in big tech? Because if you believe those things, the next logical thing to get dematerialized is property on 5 billion mobile phones. Just a matter of time.
Now, I think people forget sometimes that MicroStrategy is a software company in and of itself, and yet it has become a sort of proxy for investors wanting to get into Bitcoin. Do you see that at all as a risk to MicroStrategy shares?
Well, Emily, our stock was $120 a share, and we had $60 a share in cash that was generating zero yield. If we had returned all the cash to the shareholders, we'd have a $60 stock, and the company would be growing 5% a year. Instead, we converted the cash through a series of Dutch auctions, share buybacks, and stock and debt offerings into a company we're now growing our top line 10% in the last quarter. The stock is up by a factor of 5. We've made billions of dollars for our shareholders, and we have $3.5 billion worth of Bitcoin. If it goes up 20% a year, we'll make more off the Bitcoin than we could have made in a decade off of the existing business. So yeah, it's different. There's some volatility, but the stock sometimes moves more in a day than we could have hoped it to be at all. So I think our shareholders have benefited, our employees are happy, our customers are happy, and it's a different thing. But we'd rather be winning with something different than be sitting at $60 a share with no hope.
Any plan to use more debt to buy Bitcoin? And if so, what kind of debt?
Our approach is always to do every financing accretive. So when our stock was 120, we bought it back at 140 to buy Bitcoin. When our stock got to 300, we sold it, converted at 398 to buy Bitcoin. When our stock was 1,000, we did a convert at $1,432 a share to buy Bitcoin. When the stock came back to 500, 450, we didn't want to dilute with equity or convert, so we did a senior secured financing, paid 6 1/8% interest, and we bought Bitcoin. Now, the way that the Bitcoin market moves, the way that the senior debt markets move, and the way the convert debt markets move are uncertain. The one thing that we can be certain of is that if we do another financing, we're going to make sure it's accretive to all classes of security holders within the company.
So there was an if there. That could happen?
Our strategy, Emily, is definitely to acquire and to hold Bitcoin and to do it with our existing cash flows. And we generate $115 million in EBITDA cash flow in the last 12 months. We'll do it that way. And we'll also do it with future debt financings and equity financings to the extent that they're accretive.